Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on today's leading gapper, which is NUZE, up around 160% as it comes into the close. So thought we'd do this as there was nothing really standing out on the large cap side of things, so we thought we'd do a small cap one today. And as always, we'll do the same analysis process because we do the same pattern every time. Firstly, we go into a clean daily chart, see is there any gaps that need to be filled. Looking straight at it, there are no gaps currently. We had one gap at this level here, but as we can see, if we go to an intraday chart, as we will, that is, well, it has already been filled on the day. You will see as well, as it comes into this level, you do get a pullback, and then it push back through, and it uses that level of support. It's not a coincidence, you tend to see that as a gap fill, and that's why we always look for them. Whether you're looking for day or swing trades, these levels tend to have significant levels if it's a very clear gap that needs to be filled. So we will clear that because it has been filled, but that's why we do look out for them, because they are quite significant. Now we will go over to the standard deviation chart so we can start seeing where it's likely to be heading off these levels. So as always, we just place a line wherever we have a deviation, because more likely than not we will get hesitation or selling pressure or even buying pressure at these levels. So those are the only ones really within close facilities. We will also place one at 1405 because that will be our highest target if it continues to the upside. Now looking at an intraday basis, we can see intraday came into this level. This 476 again lines up kind of with that gap fill, and that's why you see that pullback pulls back to the closest full deviation. That's what you expect, and then it will continue, or if it's going to continue up, that's most likely where it will pull back to and continue. Reason I'm showing you like that, showing you it like this, is because whether you're looking to day or swing trade, this can help you on your entries and or exits, depending on how you trade. Obviously, if you're looking day trade, you can quite easily short it to the next deviation, and then you can also maybe switch sides, or if you're only a long bias trader, you know that's made a low risk buy entry. Then you will see it came into the next deviation, again got hesitation, didn't pull back all the time, or actually did touch the deviation, pull back in that same 1 minute candle, and then hesitated before breaking out, and again same thing, came into the next deviation, pulled back, and then again hesitating, this time couldn't actually push through. We see it pull back and again consolidates at this deviation. This is how you tend to expect stocks to react, especially on the penny stock side where they're a lot more volatile. You expect them to see them jumping within these deviations, and that's usually how we would look to trade them. Now looking at it, we can see obviously it's still up 160%, but it does look like the majority of that move was made by about 12. Then after that it started to cool down, and it kind of has just consolidated since around 2 p.m. It's just consolidated even after hours, it stayed like that. So this could just be a cool-off period before it continues its run. It could also mean that interest has kind of died down and it will continue down. So for this, we're not really going to describe the direction we think it's going to go, but instead say what our plan will be for either way that it will go. So if we open up and we stay kind of within this band, obviously if it pushes down, we will look to get bounce plays on each of these levels. Again, for something like a penny stock, we won't really give a swing analysis to it because it's not something I would personally swing, so it's not something I can really give an insight on how you would swing it. Penny stocks I only keep to day trading, and they're usually short duration trades where I will look for just that small bounce there, or a short move there, which is still a relatively big move. For example, this is probably one of the smallest moves we would look for, and that's still a 15% move. So let's say it opens up exactly where it is, we will see, or we would look for a push down to here. Again, you could be shorting this move or whatever. Coming to this level, we would expect a bounce. May not see it push all the way back to this 476, but would look for at least kind of 450 would be our target. Then if it will continue down, it will most likely hit one of those targets, push down to 333, most likely come back to retest it to 338, continue lower, 285, sorry, pull back, touch this 333, and then probably continue lower. That's usually what you expect, especially with these small caps, is when the move's finished, is usually how you see them trade, just bounce off, go to the next deviation before continuing down to the lower deviation, bouncing to the deviation, and it's usually that exact same pattern. So quickly to draw it, this is what we expect to kind of see in a very simple way. But obviously you can't, it's not going to be that clear when it comes to it. It will move something a bit more like this, where it's not a super clean move, because it's very unlikely that we get a clean move. Same thing if it opens up here. We be expecting it come into this level. We would probably expect some hesitation or even a pullback, but we'll wait for that break, come into the 686, pull back to 572, or even maybe just a whole $1.06, and then we would expect that next push to 10. But this will be quite a hard level, because you're going to have a strong psychological resistance at $10. And that is also obviously a very large push to get it from 686 to 1044, so 50% boost. So looking for that next target from 686 to 10 is a bit more or less unlikely, and something I personally don't want to be looking to trade. But if you are, that is kind of the move we would be looking for. If you were looking for something smaller, we could look for that half deviation move to around 870, and then we could cut that move in half and look for that same kind of trade. However, half deviations is usually not something I trade off, because they're not significant. But in this case, you could maybe throw them in just because the distance between is so heavy. And again, doesn't mean it has to open up here. For example, if we open it up at, say, say 420, so we'll be around this level here. Again, we would look for the same thing, open up, we will probably continue down to that 383, we would then expect its bounce to around 476, and then we would expect that push lower. So yeah, I mean, really in summary, that's all we're looking at on NUZE. The deviation levels are on screen, or the key ones at least are on screen, and you tend to see a bounce into one. You just tend to see them trade to a deviation to the next deviation. So depending whether you trade on long or short, you can use these levels in a different way. So I hope you enjoyed the video. I hope to see you in the next one, and that's it. Peace.
I wanna go, I wanna fly, I wanna take myself